Hello guys, Steven Dax here. Welcome to this YouTube videos. Today we're going to talk about some of the rules I would like to take into 2020 because I've noticed there is a dramatic change from the market condition from 2018, 2019 to 2021. So hopefully those sets of rules will help you to grow your account and also to be able to avoid all those huge mistakes that can potentially blow up your account. So before I start this video, make sure to click the like button and subscribe. Let's get into the video. So the first rule I want to call its name volume density, because recently pretty much for 90% of the gappers, their pre-market volume normally exceeds 20 million to 40 million-ish. Now for the normal volume is under 20 million and extremely crowded volume is over 40 million. So let me give you like a rough estimate formula for that type of pre-market volume to estimate the entire day volume. So back in 2018, 2019, we have around, in average, around 10 million to 20 million. That is considered as crowded trades. Now crowded trades is over 40 million. But for the formula itself, that pre-market volume times 10 to estimate entire day volume doesn't really work lately, especially that the volume is so much that you can basically trade in pre-market without actually affecting the liquidity. So the first hard rule I want to set for myself will be if the pre-market volume is under 10 million in the market condition of 2021, that's basically not tradable because there's way too much volume potential can pour into the stock to make the stock jump 200, 300%, and nobody can expect that. Now the second rule is if the volume stays between 10 million to 20 million, that's considered to be like a normal stock that can be traded with maximum volume, but not as crowded. That's basically untradeable. For the pre-market volume exceed over 40 million, then that's type of indicator to tell you that do not trade after market open because it's impossible to predict if it's gonna pull 20% or spike another 50%. So if you want to trade this type of crowded tickers, I always recommend that wait until 10:30, about an hour after market open, to see if there's an actual fake out or potential consolidations for you to short into, because there is way too much unpredictable factor in the first an hour for those crowded tickers. So if you are mainly short sellers, there's going to be two time zones for you to take your positions. First of all, will be between 10:15 to 11 o'clock. That's probably the most predictable time zone for you to take a position. The second time zone will be anywhere between 3 to 3:30 to size into a potential consolidations. Now remember, you cannot size into a parabolic action because volume potential that can potentially squeeze the stock over 70% in most of the scenarios. So in conclusion, three things you have to remember. 10 million or under in pre-market, that's not tradable. 10 million to 20 million, that's stable or normal volume can be traded throughout the day. Over 40 million is basically untradeable. And also two different time zones you can take a short positions will be anywhere between 10:15 to 11 and 3 to 3:30. Now try to not hold a stock overnight because there's also unpredictable factor in there as well. So if you want to be a short sellers and stay profitable and consistent, make sure to follow the first rule. Now let's talk about the second rule. The second rule is meaning for buyers. If you want to buy something, that try not to buy into the next day. Now next day has its definitions. If you see a chart that trades over 300-400 million volume in the previous day, and the next day the stock is only trading 2-3 million shares in the pre-market, that means in the next day volume, it's not going to even compete with the first day volume because the first day volume is way too crowded. If there is a massive difference between the previous day and the current day volume, let's say the volume ratio is 20 to 1. So for example, on the previous day, 400 million shares traded. On the next day, there's only 20 million shares traded. So the volume is 20 to 1. Now, if there is a massive difference of the volume between 2 days, then try not to dip buy in the next day because there's way too much back orders trying to sell into your bids, and the stock is pretty much impossible to come back up or to test the previous high. Now let's talk about ideal timing for buyers to potentially take positions throughout the day. So first thing you can think of is if the stock is not yet overextended enough, and how should I take a risk and where should I take a risk? So if you don't find the right timing for taking a long positions, I do recommend that always take a look at the volume. If the stock is not creating enough range, let's say the stock is only up about 80%, 70%, and it's not over 500, 600% on the day, then that's an ideal scenario for you to take a long positions. As I talked about for pre-market breakouts in the previous videos, that the flow has to stay under 20 million, market cap as low as possible, and also there's either it's a multi-day breakout, have a high dense support, or you're looking at the pre-market resistance. And the majority of the short squeezes happen in the midday. So if you really want to take advantage of that, if the stock tends to hold close to 60% of the entire day gain and consolidate about 2 to 3 hours, that's where you have to pay attention to the volume. If there is enough liquidity, soon as there's a perk come into the chart and you can attract a decent amount of buyers to push it off the support level and cause a huge short squeezes, that's where you should take your positions before that. And that time zone are normally between 12 to 1. So for midday breakout, it is extremely tricky. I do recommend to you to track a lot of data. ASAG is an example that perk through the midday, and when parabolic, you usually hit $20 a share of a $3 stock. So that's something that you can take a look at. Try to find a very similar chart and also a similar flow as well, also a similar volume. So that will be all of the suggestions for short timing, long timing, and something for you to look at and also something for you to avoid as well. Hopefully this video is helpful, and I do wish you stay consistent and profitable in 2021, and I will see you guys in the next one.